Hey everybody, it's Brett here. Just wanted to do a quick market update. I've been traveling a little bit. I wanted to get you guys updated on the markets because things are starting to heat up. So let me jump over to the charts here and we'll give you guys a heads up on what I see is coming. Here's a quick look at the DXY. So as we have in this downtrending channel here, it's been doing exactly what we thought it would do, and it's heading down toward Bitcoin rally zone here right above my head, as you can see. And basically what I'm expecting is that we do lose this 104 level on the DXY. As that pushes down, of course, it's an inverse relationship typically with Bitcoin and crypto. So I am expecting this to break and head down into this Bitcoin rally zone. As we push higher, we might stumble a little bit in this block. Maybe it pushes up for a day or so and delaying it, but I think this does head down lower, and that's good news for crypto and Bitcoin. Taking a look at the total market cap here on the daily time frame, big bull flag here, which is good. Measured move up to around 3.8 trillion. Of course, we'll see a hiccup around 3 trillion on the markets here because, of course, that was the exact top of the last market cycle, and probably, we pushed up right in this range around 2.6 trillion, also a key area in the last cycle. So we'll be watching for a break above that. I have an alert already set up at 2.65 trillion, marked as breakout confirmed. And again, this is the bull flag scenario. I have a Fibonacci on here, incidentally. From the swing low to the swing high, we saw that it came down exactly to the 50% retracement, which is pretty common on these retracements from key levels, and not only once, almost twice, 3 times, 4 times, 5 times, and then broke out above. So that's good news. Here's a quick headline here. I always laugh at these because not the second part, but the top. It says, here's when Bitcoin will hit 100,000, and then it doesn't give any indication when it's going to hit 100,000. Fortunately for you, I got your back, and your boys got your back here. So what we see here on this chart, which we've been looking at for a while now, is the potential path to 150,000 Bitcoin and the 10 factors that I think could contribute to that. The ones that are checked off in green, we've been seeing that happen. The ones that are in red are sort of not happening. This one, I'll go through these quickly because I think it's helpful to understand how we'll get to 100K and when, but let me just pull this up for you guys so you see exactly when. And I did redraw this blue bars pattern, which was an overlay from the last cycle, and oftentimes these things are similar, so there we go there. And previously I had it up to 150K, but we had this deeper pullback right in this region, so I've redrawn this to overlay more closely kind of what price action is showing us. And so here's what I would suggest we see is that we do see a push up here relatively quickly here, stretching out just a little bit. It's not going to be exact, but something more like this, and getting up to 100K. Probably push right up to around 96K and see some profit taking. Everyone likes to get out a little bit ahead of the key levels and before the music stops in the musical chairs of crypto. And then we do push up to 100K, I think certainly by September, maybe even stretch it out a little bit closer to October. But and then I think 150K is right around the corner. I think that's a given in 2025, but maybe sooner. These factors up above can certainly get us there faster, and you guys can track this if you Google me on or look me up on TradingView. I have a study here we've been updating, but here's how we can get to 150K Bitcoin 2024. Certainly 100K, I would say, is given. So BlackRock, Fidelity, MoneyClo, and ETFs, you saw that happen already. The bank term funding program, which ended, we didn't see a whole wave of bank failures as Arthur Hayes had predicted, but we are hearing news right now that there's up to 60 banks that may be on the verge of failure. So if that happens, the bank term funding program is over, then we have to look at, does the Fed come in and inject QE to sort of save the economy, save the banks? We'll have to see how that plays, but certainly I think we could see a flight to quality with money flowing into Bitcoin and crypto. Again, the analogy is each one of these is a small smoldering campfire, and when enough of them ignite, they'll all go up in a blaze like a good old-fashioned California forest fire, right? So the third one is QE money printing. We haven't seen that yet to start paying down the U.S. debt. We're in an election cycle, and so currently we do have, one of the candidates, Trump, is very pro-Bitcoin now, and Joe Biden has vetoed the pro crypto-friendly bill. So I think they're going to have to get on the QE money printing here going into the election, boost the economy, and that will be good for crypto. So both paths lead and point toward higher prices for crypto, and that's good into the end of the year and election cycle. We are still looking at the de-dollarization of the dollar and BRICS nations. So I have this sort of question mark over 3 and 4. That's still out there. The GDP of the BRICS nations recently surpassed that of NATO nations. So less demand for dollars, more supply, and that could cause hyperinflation and less demand, for the U.S. dollar and the energy sales. So we'll keep that in mind. Flight to quality there. We'll see what happens. Number 5, corporate accumulation, Michael strategy. I can't stop saying it. That's a shorter version of Michael Saylor of micro strategy. Michael strategy is so much easier. Apple, Tesla, I think are going to start showing Bitcoin purchases on their K1s when they do their quarterly 10Ks, etc. Country adoption. We were just having an interesting conversation in our Retire Rich class, whereas the president of El Salvador now talking to the new president of Venezuela about them also adopting crypto and Bitcoin. So we're going to start seeing more of that, more country adoption, and that will lead toward more scarcity and demand. So that leads right into post-halving, reduced Bitcoin mining supply. We know that post-halving, the miners some people think that right after the halving, it forces it to go higher. It doesn't. Usually it does pull back and consolidate. Many of the miners are now having to sell Bitcoin to buy and invest in new equipment, because the hash rate is doubled. They need stronger machines, bigger ASICs. Those are expensive investments. And so some of them just get out of the game completely. But either way, the allowable Bitcoin gets cut in half, and that means less available supply for the miners to sell. Previously, they were selling about $12 billion a year to cover energy costs and overhead and mining machines. So that's going to get cut in half. $6 billion left, or less rather, that the miners will be selling, kind of leading to more of the demand surge and less selling pressure. So as we know, markets turn higher when the sellers are exhausted. So that will help there. We also have less available exchange on supplies. We've been hearing that for months, that supply on exchanges has been dwindling. So that at some point will create a demand surge and can really contribute and may even fire the the parabolic move, which is there's usually 3 levels of velocity or slope of the rally. Is this, and then a little steeper, and then that final phase is that ultra steep phase where it becomes a blow off top. So, and then if you draw that around, that's the parabola. So anyway, political support in favor of Bitcoin and crypto. We talked about that. Donald Trump coming out strongly in favor of Bitcoin and crypto, as a political platform. I'm not sure he really knows what it is, but I think many people are single issue voters now, and I know people that are saying, hey, I don't really support Trump, but if he's pro-Bitcoin, I'm in. Certainly the business owners are predominantly Donald Trump, and so we'll see. That's he's ahead in the polls. That would be great for crypto, and that's good for us. Global fiat debt bubble right there. I'm abbreviating too many words here. The global fiat debt bubble. Now, we had that on there before. Remember, we pumped $35 trillion of printed fiat currency into the global economy after COVID. Has not unwound that at all. Still in there, and the solution has been print more money. I did add the commercial real estate crash. I've been talking about that for years now. Many of these big companies, big office buildings here in Washington, D.C. and New York and Austin, they're vacant. And so the banks, this could certainly contribute to the bank failures. A lot of the banks have been carrying unrealized losses, and through their accounting practices can kind of leave it on the books and not count it as actual or realized losses. Same thing with these commercial, big public Fortune 100, 500 companies. I know for a fact that many are been paying rent and not utilizing the space, employees not going back to work. So at some point, there's a good point where probably commercial real estate is going to come down. So all of this leads to a flight to quality and putting money into the leading assets like Bitcoin, which has outperformed every other asset in the last decade. So moving on here, and These, by the way, these are just Fibonacci projections. Here, the last cycle from the cycle high to the low, and projected the market cycle top exactly at that 3.618 Fibonacci extension. So by doing the same here, we're getting this 150K level and even 200K level at the 3.618. I had massaged that a little bit. I had it at 250K, or right around 211K. It's going to be in this range, but it's these big round numbers that usually see the biggest sell pressure. So we'll keep an eye on that, certainly. All right, so that's about all I wanted to cover on the macro side. Here's the chart I really want you to see. So in terms of Bitcoin here, what I love to see, just keeping things simple, we do have our own custom indicators that we rely on, but keeping things simple here. When Bitcoin tends to pump are when these EMAs, the exponential moving averages, tighten here. If you put on an EMA ribbon, easier to see when these things tighten here and consolidate. Usually that's when the volatility is low and it just shoots up out of there. In our Retire Rich classes, we were invites people to get into the AI tokens back here, caught a nice run, and then again in January, February, we're advising to get in. So the point is, we are real close here. I'm just waiting for confirmed breakout here above, close above, say, 72 to 74K. Of course, above the last high, 74,000, even better. But I like these EMAs. They're starting to turn up. We have an ascending wedge here. Also a bit of a bull flag. If we were to look at a bull flag, it has already broken out of that. So that's good. And I'll just draw that here for you guys. And so, it doesn't mean it's confirmed, but this is the bull. What is interesting, and I'll show you, is that the measured move on this bull flag, so from here up to here, and then cloning that line, it's going to give us a measured move here right to 100,000, right up in this $100,000 range. So this is good, you guys. And so I do think this plays out. I'm leaning toward that, and also a steeper curve. This would be that steeper curve on the final phase of the bull run, whereas we had sort of our original line in the sand here, and the longer term macro trend a little bit more shallow. So we're seeing seeing that third phase potentially coming into play on the market. So, and if you draw over that, that's that parabola. So anyway, these three circles are kind of the case point, base case of what we expect to see. I do expect to see a breakout soon. Maybe it's a little bit of a pullback here and then breakout. Typically we see breakouts to new highs on the third or fifth attempt. And I'm drawing lines all over the place here, guys. Let's see, TradingView's kind of made a change in there, how their buttons work. So if we take this out for a second and I just circle, so we attempted new highs here, and whether this was the second attempt or not is unclear to me. But I've noticed trading 20 years that usually breakouts happen on the third or the fifth attempt. So if this is 1 and this is 2 and 3 and 4 and this is 5, we should break out here. But this one here wasn't really a test of the trend zone. So we could see one final pullback and then that breakout. But I think the greater risk is being out of this market. I would start accumulating and dollar cost averaging into the market here, but keeping some powder dry just in case we see another dip. But on that token, I think Bitcoin, Ethereum, Solana will lead the next phase. I'm not seeing a lot in the altcoins just yet. And of course, ETH had that big push higher. That's sort of now it's consolidating based on the increased chances of the ETH ETF. They were sort of approved, but the SEC kind of kicked the can down the road for when they can start trading. Solana, I do like here, nice symmetrical wedge, ascending wedge. And once that breaks out, I think easily we go up to new highs. I think Solana could hit 1,000 this cycle, certainly 500. In terms of the other things here on individual coins, the only one that really looks good to me right now is Injunctive. Injunctive having a nice little breakout and today, nice chart pattern, nice bottoming here. And so not financial advice, but I love these bottoming patterns, and triple test bottom and then back above that 21-day, the 50-day EMA rather, and the 21-day just behind it. So, we call that above the ice. Better to be above the ice versus below the ice, where you're hitting your head and you're drowning and drowning and drowning and drowning and finally getting back above the ice. I love this type of pattern, and, it doesn't happen very often. So, Injunctive looking good. So, by the way, if you like this content, be sure to hit like down below and subscribe. And I'll be on more now that I'm back, and then the saddle took a little getaway, and so I'm back in action. So anyway, thanks guys, good to see you, and hold on to your hats belts and button your chin straps. Things are about to get exciting. So we'll see you soon. We'll keep you updated. All right, take care.